Hello and good morning, listeners. Welcome back to Almus Market Mornings, your daily dose of global financial updates. I'm your host, Swaraj Rajagopal, and we have got you covered on everything from currency shifts to pivotal central bank decisions and important speeches. Plus, you'll gain expert analysis on macroeconomic data that's shaping the market narrative right now. Join us for this episode and navigate the markets with confidence.
Even though the FOMC took the backstage when compared to the election results this week, there were a whole set of recovery moves that drove the markets. The dollar corrected slightly, possibly driven by some profit taking. Bond yields were down, while gold recovered above 2,700. Though the Fed cut rates by 25 basis, the focus yesterday was also on one other element, whether Mr. Powell will resign if President-elect Trump asks him to. So he had a lot of questions on this front, and of course he answered with a firm no, since the president legally can't do much about it. Good morning, JK. There was a slight recovery in markets and also the Fed's meeting and also the Bank of England meeting. How are you reading the moves post all these events?
Good morning, Swaraj. Yes, at least FOMC was not a drama like the previous day. It was quite a calm event, much less exciting than the previous meetings actually. And, the just ahead of the meeting, there were some people even speculating on the forward guidance on December, indicating a pause because there was an expectation inflationary policies of Trump will be playing out and all those things. But Trump seemed to be quite unperturbed. In fact, the FOMC statement itself was, quite, different in the sense that they omitted reference to, having gained greater confidence in inflation moving sustainably towards 2% target, but risks to employment and inflation were roughly in balance. Then Powell, in his press conference, was mostly trying to drive home the fact that they are on an easing path, and the pace will, of course, be decided by the incoming data. As of now, the inflation is moving towards their goal, although the core inflation is slightly higher. Therefore, it was a kind of dovish cut from Powell. Yes, as you said, he was a very categorical, in saying no to pointed questions about whether he would leave the office if he was asked to by the new regime. That is very, categorical. He did acknowledge that the economy was strong, labor market was not a source of higher inflation, but the inflation was also, moving toward the desired level. So I think that made the meeting quite a, I would say, a normal kind of meeting. So it was met with calm response from the market. But if you look at the markets themselves, as you said, they have corrected quite a bit. And there were good reasons for that, because markets realized there are still 2 months for Mr. Trump to assume office, after which only any of his policies can be implemented. And, the market is already excessively positioned on the long side of the dollar and short side of the bonds, expecting his policies. Another factor that you should look at, historically, is that the last tenure of tariff did not lead to inflationary impact until 9 months. Also, there is an expectation that this time around, tariffs may not be imposed straight away, but there can be some sort of a negotiated deal with the concerned countries. So these factors actually are slowly working its way into the euphoric markets, and that's why we are seeing the sobering down of moves. Dollar did move lower. But if at all dollar has retained its strength, it's only because of the economy. Because U.S. economy is still performing much superior to most other economies. Europe, as we have been repeating, is having its own problems. UK is dealing with high deficits, although they cut the rate by 0.25%. The governor indicated that they will have to move in a very measured way of in further cuts, and they look forward for inflation to come down more sustainably to cut more. So these things ensured that dollar actually stayed relatively strong, although it has reacted from its best levels. Yen, for instance, again found good resistance above 154, but stays relatively weaker also because of the yield difference playing against it. Chinese yuan, stunning recovery yesterday because we had seen 7.21 and then we also saw 7.14. And this is mainly on the basis of two things. One is the huge rise in Chinese exports by 12.5% in the month of October. And also the fact that China is working out another stimulus policy, which can be out anytime today or over the weekend. So Chinese yuan has also recovered quite a bit. Gold was short-term oversold, but it looks primed for more correction because having risen, strongly in the year, in the last quarter, we always see profit taking in many of the, asset markets. Stocks maintained their gains. In fact, Nasdaq gained 1.5% more. But there also, I feel, being the last quarter, we can see at some point of time, the heavenly valuations can kind of get corrected, and people will look to earnings to justify the current valuations. Therefore, I think it's a matter of time before stocks also correct. So all in all, the euphoria is slightly dying down everywhere, and we are back to watching the economy and how the relative performance of the economies play out, which currently definitely is in favor of the dollar. So on the rupee, this time we have seen participation along with the other dollar moves. But actually, one would say that even though other currencies did recover yesterday in Asia time, rupee did not show such recovery. That's mainly due to continued FII outflows, which have reached 1.5 billion already in this month, following more than 11.5 billion outflow in the month of October. So as long as the outflows sustain and exporters keeping off, I think the rupees pressure on the downside will remain, although the move lower is being controlled due to intervention from RBI. This is likely to continue possibly till the end of this month. Expect fresh flows to emerge from December onwards, by when even the stock market should reach some attractive levels, barring any unexpected turn of events in the global markets. Finally, interestingly, on the monetary policy side, yesterday, apart from Bank of England, Swedish bank cut rates by 0.5%, and standing out from the rest, the Brazilian central bank has actually hiked rate by 0.5%. This is the second hike they did in the last two meetings, consecutive meetings, in fact, because of the inflationary pressures and also the high deficit. So there are some economies which are actually standing out, just like the Australian central bank, which is also holding on to a hawkish policy, and the Japanese central bank, which is expected to hike rate in the month of December once again. Thank you and have a nice weekend.
Thank you, JK. And there you have it, folks. The FOMC was quite calm. The statement this time, however, was a little different, as there was an omission of a reference, which is inflation moving sustainably towards 2%. That particular statement was omitted in the FOMC statement, which is released after the meeting. There was some recovery driven by profit taking as the dollar had rallied significantly in the past few days. In the other central bank meetings, Bank of England cut rates by 25 basis. The governor mentioned they need further evidence of inflation moving down to cut rates even more. Swedish central bank cut rates, while Brazilian central bank has hiked rates due to inflation concerns. And when it comes to recovery, Chinese yuan saw a very good recovery from 7.21 to 7.14. Good export numbers and an expected stimulus has resulted in some yuan strength. Stocks also maintained the gains which they had experienced post-elections. So overall, I think the euphoria, as JK mentioned, euphoria post the elections is slowly calming down. Focus will again turn to the economic data. When it comes to our own rupee, it did not see a recovery following the other Asian currencies yesterday, as FII outflows have continued, which has already reached actually $1.5 billion this month. So I think till the time that does not subside, we will continue to see a pressure on rupee. That's it from us today. Have a very good weekend. We will see you all on Monday with the fresh round of market developments. Thanks for listening.